here today with my good friend, real estate partner, and longtime coworker, Chey. And Chey, we were in the office the other day talking, and you were saying, Tara, I found my next dream home. So you started asking me all these questions about how do I get ready to buy that next house? What do I do with my current house? And all these questions. And I'm like, let's stop. Let's record a video. Let's answer all the questions, and we'll go through what a consultation looks like to get you on a path.
I love it. Okay, so I found my dream home.
Okay.
It's actually just like a mile from where I live now, not even. And I do love the community that I'm in. But when we bought this house, we bought in mind that at some point we would make it a rental. I didn't think I would find my dream house this quick, but since I'm a real estate agent and I'm out showing properties all the time, it happened.
I hear that a lot from realtors.
Yeah, it happened. I like houses. So how will I make this house, like how will it all work? How do I make this house a rental, and what do I need to know to buy that next house with that in mind?
First, you're no longer going to be a first-time home buyer, right? So now you're purchasing your second house. What is the price point of your dream home?
Dream home is going to come in. I don't know I haven't spec'd everything out because it is a new construction home, because I'm a new construction girl. I'm a new construction specialist. Actually, I think it's going to come out around $794 is what we're budgeting.
That price point we know is well above the FHA, current Maricopa County FHA loan limit of $557. So we, will initially just go down the route of conventional financing.
Yes, plus on this house, I have an FHA loan, so I don't even know if I'm going to have two FHA loans.
Yes, let's touch on that really quick. You can have two FHA loans under certain circumstances.
So we're going to focus on conventional financing.
Yep.
Which means minimum down is going to be 5%.
Okay.
So
we want to do 20.
Great.
So we can avoid that mortgage insurance.
Awesome. Okay, great. Mm-hmm. So there are, two ways that I start to look at it. One, do we need your current house rented out to qualify? Yes or no?
Okay.
Regardless if you're going to. Obviously, your plan is you're going to rent it out, right? You're not just going to have a house sitting there empty, right? You're going to want the rental income and all the things. If we don't need it rented out to qualify, then there's just less steps you have to take.
Okay.
So, meaning your next house wouldn't be contingent on your current house being rented out.
Okay. I think we're going to need that rental income.
Got it. Okay. So if we need the rental income before you close on the new house, you have to have at least a 1-year lease agreement in place.
Okay, 1-year lease agreement, can do.
Mm-hmm. First month's rent and security deposit in your hands.
Okay, so this is a new build. So, maybe I'm going to go a couple months out, get it rented, say it's going to be available at this date. So how am I lining that up with the closing?
Mm-hmm. It needs to be the lease agreement needs to start within 60 days of you moving out of your current. You don't have to go find temporary living. Those tenants don't need to be in there by the time you close, but the lease agreement must start within 60 days. As far as just that piece, that would be it. As far as what do you need to do to use the rental income to qualify. Now, the amount of rental income, if you're curious, that lenders use, if you're going to rent out your house for $3,000, lenders will use 75% of that.
Okay.
There's a vacancy factor there for other expenses and things that you as a landlord are going to now have. So we use 75% of that to offset your current payment.
Okay. That's good to know. I did not realize that. Okay. So we have to qualify for 25% of the mortgage payment, though?
Nope. So if you're going to get, let's see, what's your current mortgage payment?
Let's call it $2,800.
Okay. And let's say you're going to get $2,800 or $3,000. We'll say you're going to get $3,000. So we can use 75% of $3,000, which is $2,250.
Okay.
Offset your $2,800. So the difference there is going to be $550 that goes into your debt to income ratio.
Okay.
Not the full $2,800, only $550.
Okay. So I'm qualifying for the new house mortgage payment plus $550 of the other one.
Yep. And any other debts on credit. Yep.
Debts on credit. Okay. Got
Yes.
it. And
Okay.
what are we trying to stick at for our debt to income ratio on a conventional loan? What's our percentage?
Yes, 50%.
50%. So
Yep.
when we add up the rental house, the $550 from the rental house, the new mortgage payment, and then any debts for both my husband and I, right? Because we're on the loan.
Yep.
Then it's got to be 50% of our gross income, right?
Gross monthly income, correct.
Okay, so that might be a good segue to talk about income, Tara.
Let's do it.
Because you and
All
I
right.
have worked together for years,
Yeah.
and I've been a W-2 employee, but now I am self-employed. I still
Yes.
do consulting for y'all, but I'm a full-time real estate agent, and that
Yes.
is 1099 income.
Right.
So this house I was able to qualify with my W-2 income, but now 1099 income.
So that gets tricky, can definitely be tricky, right? So the standard rule
Okay.
for like conventional, FHA, VA, those traditional loan programs that we all know everything about, you must be self-employed for at least 2 years.
And when we say 2 years, does that mean 2 years filed tax returns or just 2 years?
And 2 years federal tax returns, correct.
Okay.
Now, your first year, like, you know, if you became self-employed March of 2026, right, you're going to file 2026 and you'll have not quite a full 12 months. And that's okay. Because then you'll get 27, you'll have a full year, and you'll have been self-employed 2 years, but not have like 24 months necessarily reported. But that's okay as long as you have 2 full years. And then we will average those 2 years of income.
Average, okay. When you say 2 full years, like what do you mean? 2 years filed tax rate?
Yes, but my whole point
It
is
might not be 12 months.
Right.
Okay.
Because March 20, you didn't go self-employed January 2026, right?
Well,
You went self-employed.
I was doing both.
Okay. Well then, so I guess just the timing of someone going self-employed, if it is mid-year, that's okay. As long as even if you only have a partial year on your filed tax return, that's still okay.
Okay. Yeah. Okay. Got it.
Now, I will just mention there are outside of the box, they're called non-QM, non-qualified mortgage loan programs out there that are becoming very popular and specifically popular for self-employed people.
Okay. How does that work?
So those programs they're gonna have a little bit different rules as far as required down payment, minimum credit score, sometimes debt to income ratio and reserves. But these programs are like bank statement programs, 1099 programs. These programs, some of them, will allow for 1 year self-employed if you're transitioning from your W-2 to 1099 in the similar line of work. Or same to similar.
Similar or same?
I'm going to say same unless we can paint the picture of the similar.
Okay. Well, you know I'm an artist, Tara. I can paint pictures all day long.
I know.
Okay.
It's a gray area, but people should call and ask and find out. Because if the answer is like no, well then we know the answer is no and you got to wait 1 more year. But if the answer is yes, then there we go.
Right. Like we should go for it, right?
Yeah. Yep.
Yeah.
These self-employed programs too are really popular because a lot of times, and you're going to find this when you go to file your tax returns, you have the ability to write off a lot to reduce your tax liability. And so what you really make versus what you're showing on paper can be 2 very different things. And the traditional loan programs are going to use that income after all expenses are reduced, what you show on paper, where in these non-qualified mortgage space, we take the tax returns out completely and we look at just deposits into your bank statement. We look at that gross 1099 income. So they work very, very well for self-employed.
Okay, but what's that going to cost me in terms of, is the interest rate higher?
That's a great question. It's not as bad as you'd think. As of late, right? I obviously can't predict the future, but about 0.25% higher in interest rate with 20% down.
Okay, 20% down though is key.
It is key.
And what are we looking at for like DTI percentage and credit score for those kind of
With 20% down, majority of those will go to 50%. Okay. They will have better interest rate pricing though, the lower your debt to income ratio. So again, these work a little differently. We may see a better interest rate at 43% debt to income ratio. If you have 6 or 9 or 12 months reserves, that could improve the pricing. So these programs are really looking at a bigger picture than those straight, conventional standard guidelines.
Okay. And what did you say for credit score?
Minimum 660.
660. Okay, well that's not bad at all.
No.
Yeah. Okay, I love it. So, how you mentioned more cash reserves, but what's like a minimum cash reserves? Like either whether it's a traditional mortgage, conventional mortgage, or the non-QM mortgage that might be better for self-employed. But let's just say even W-2 or whatever. What are we looking at for cash reserves?
Yeah. So, well, in your scenario where you're going to retain this one as an investment and buy your new, we need 6 months reserves on the one you're keeping.
Meaning 6 months times the 550 we talked about?
Nope, your whole mortgage payment.
Oh, okay.
Yep. And 2 months reserves on your new.
And 2 months worth of mortgage payments.
Yes.
On new.
When you don't currently own, I'd say the standard is 3 months. But when you start having multiple properties, more reserves are going to be required across all aspects.
Whether it's non-QM or or traditional.
Fannie Mae, Freddie Mac, yeah.
Okay. Yep. So let me just see. I had written down some of my questions. Make sure that we got everything here. Is there anything else you can think of?
Depending on how far out you are, just making sure that we should keep in touch, right? Let's understand if there's any changes along the way, any changes to your credit. I would say getting pre-approved too early is not a thing. It's never too early to just complete the process. Let's see where you are now. Where do we need to get? Contact underwriting on your self-employed situation to see what we know now. Could it work? Or just so you're set up, right, for the future, and you don't put an offer down and it's 60 days from closing and now you don't qualify. Right. That's the worst thing that could happen.
Well, that's interesting that you brought that up because this just happens to be a new construction home and we're going to have a 7-month build time. So that kind of changes things a little bit. But what's interesting and what I wanted to mention about that, and obviously you're a good friend, so you give me this information that, by the way, the builder's rep doesn't really give you because the builder's rep doesn't even actually work with the finance company. But a lot of builders require that you use their financing company to get the mortgage, to get the incentives that they offer.
Sure.
And but there is one good thing is that if for some reason, and they don't do fancy things like non-QM and all that kind of stuff most often. So if you don't qualify, don't think that you don't qualify. Just call me, call Tara, because you can still, if they turn you down, that you can still use your own lender and still get those incentives as long as you start with their lender first.
Right.
And again, they don't have nearly the amount of products that Tara has. So it's just don't just be defeated and say, now I can't get it. Just call one of us. And we'll get you on that path for sure.
Yep. Yeah, builders are usually, going to be very in the box for your financing. So if you're outside of the box, or they're telling you that you're not qualified, to Shay's point, you just call and ask.
Yep.
Never, what's the worst that could happen? Someone tells you no. But at least you know.
That's the other thing is that if, for some reason, if you are buying a new construction home and you get turned down by the builder's lender and they say you can use your own lender, I mean, even if you were to come back and say no, you would say, you would come up with a plan. No now, But if you do this, this, and this, then 6 months from now or 1 year from now, then we can do it, right?
Yep.
And the builder's lender's not going to do that. They don't put you on a plan, right? Most of them. I mean, I guess I can't speak for 100% of all, but just in my experience, that's not something they do. They're like, nope, sorry, you're not qualified. If you can get your own lender, good. If not, then bye.
Bye. Yeah. Very unfortunate.
I know, but we're not going to do that, right? Because even if you can't qualify through Tara, and if you can't qualify through Tara, you probably can't qualify, but she'll give you a plan that you can qualify. And then we're going to keep in touch, right? I mean, I know I am. If you call me or if you call Tara directly, that's great too. She's going to give you information and keep in touch with you. Maybe some guidelines change and...
Oh yeah. And I can't tell you guys, like we have past clients that, have purchased in the past and now they want to purchase a new build and they're like, Tara, we have to use their lender. And I'm like, I know. And that's okay. And I've had to sometimes give advice and tell them to go back to that loan officer at the builder and give them this strategy so they could get their incentives. And I'm happy to do that. I'm happy to be a resource because beyond them purchasing this one, I'm still going to be their lender for life because that lender isn't going to do anything for them, right? No. After they close on that new build, that lender's just gone. You may want to rent it out and go buy your next house. So having that lender and real estate partner for life is really key because the builder and their lender won't be there for life. All right, well, Chey, thank you so much for joining and doing this video. I think it is going to help a ton of people, and I'm so excited to help you on your journey to purchasing your next dream house. Yeah. So if anyone out there has questions, wants to talk through anything, please give us a call. Happy to do a loan consultation anytime, 480-725-0150. Thanks so much.